So starting with that, interest rates unchanged, that will no doubt be a positive surprise for the banking sector. Going into today, we had about 13 basis points of a cut going into this. So that is definitely a hawkish surprise on the interest rates. But let me tell you more about what they've announced on the LTROs. ECB says LTROs will provide liquidity at favorable terms to bridge the period until the TLTRO 3 operation in June 2020. They have announced additional LTROs temporarily. So they have basically announced a bridge liquidity operation. We know that the TLTRO 2 existing funding facilities expire in June. So they are announcing a bridge facility to get banks to that cliff. They say that in TLTRO 3, the considerably more favorable terms will be applied during the period from June 2020 to June 21 to all TLTRO 3 operations outstanding during that same time. So clearly they are focusing on the funding side of things. They want to make the terms for lending a lot easier than what they had indicated in the past. ECB says throughout this period, interest rate on these TLTRO 3 operations will be 25 basis points below the average rate applied in Eurosystem's main refinancing operations. So that is below the refi rate, not the deposit rate, worth bearing in mind as well. Some people had been hoping for them to provide terms, lending terms below the deposit rate. And in addition, the ECB says a temporary envelope of additional net asset purchases of 120 billion euros will be added until the end of the year, ensuring a strong contribution from private sector purchase programs. So that is interesting as well. We have got an additional bracket of asset purchases. They've been buying at 20 billion euros a month. So if you multiply that by 9, roughly to the end of the year, that's 180 billion. We're now getting 120 billion on top of that. And they're also indicating that they're going to be leaning a lot more on private purchases. In other words, that means corporate bonds as well. ECB says in combination with the existing APP, this will support favorable financing conditions for the real economy. So a bunch of measures here out of the ECB. Euro is spiking, no doubt, because we didn't get that interest rate cut. Let's talk about other markets as well. Let's see what 10-year bond yields are doing here in reaction to this, and just waiting for that to come up. So we have the 10-year bond now trading at around minus 76. So we haven't, we sold off about a couple of basis points on the 10-year bonds. 10-year France, we also have trading a little bit higher, minus 30. And Italy has rallied. We were trading at 128-ish just before this meeting. We've now rallied back to 125. So that is the reaction in bond yields. Not major movement there. But let's talk about European markets and whether or not this action has actually helped. Doesn't appear to be so. Etc. DAX down 7% now. CAC 40 down 7.5% in France. And obviously the FTSE, unrelated to this decision, is still trading on the back foot as well. Lots of things going on here, but it seems like it's a huge task on the ECB to help shore up these markets. Let's get back to our guests here on the show, Guillaume Menuet, Director of European Economics from Citi, and Ken Watcher, Chief European Economist from IHS Markit. Guillaume, just starting with you. So, wow, they didn't cut interest rates, so that's a surprise, and leaned more on asset purchases and funding, which is pretty much what you had envisioned them going for. Why does that make sense?
It makes really sense to target the corporate sector, and therefore I wouldn't be surprised if half of those 120 billion are directed towards the CSPP eventually. I mean, at least doubling the size in proportion.
They don't have a lot of space, though, in the corporate bond program.
Well, they've got 75% of all issuers that they can do, and therefore there's a lot more space than in certain sovereigns. So I think for me that's going to be the biggest market reaction today in terms of corporate credit spreads.
But why are asset purchases so important for the transmission? Explain it to us.
Because it effectively offsets the tightening of financial conditions, right? That is effectively lifting every asset price up because of the displacement that it will have later on. So again, encouraging a bit of risk taking, or at least offsetting the adjustment that you've seen in prices. There's also a bridge liquidity operation that has been put on the statement, which I think that the ECB is now grasping the fact that maybe we'll know during the press conference, but maybe we have also supervisory decisions which are going to be taken later on today to facilitate banks channeling that cheap liquidity to the real economy. So I think it's a good package. The good thing is they didn't cut rates, which means that all the unintended consequences they don't have to face now.
Yeah. Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.